Are we looking at another stock market crash here? Last 3 days, the stock market has continued to push lower. You had the S&P 500 today alone down 2%. You also had the NASDAQ down 2.5%. And you have the small caps, the Russell 2000, down 3%. So what are we looking at here? Is this just a couple of days of a correction and then we're going to push right back up to the rally highs? Or is this something much bigger? Well, you got the rates. They're pushing higher. You got the VIX. It's starting to perk up some as well. In this video, I'm going to go do the technical analysis of the indices. We're going to go look at some of the yields and some of the other indicators that I like to follow as it pertains to the stock market. But first, make sure to click the join button down below so that you can get all of my stock market research delivered to you each and every day. That's going to include my daily watch list. That's going to include my master weekly updated watch list, as well as updates on the big tech stocks and the stock market overall. So click join button down below. Now let's go ahead and look right at these charts here. SPY, downtrend going all the way back to the beginning of 2022. You had this breakout here that really looked like there was a lot of potential there, this blue line. It looked like we were going to break out above it. Stocks were looking very optimistic, but we peaked right afterwards. And then a lot of people got excited about, hey, we got this bull flag pattern forming. And yeah, this is just a little holding pattern until we just march right back up. But that got knocked out of the park today with this massive sell-off lower. And even more so, if you look at the lows from February 10th, we broke below those. So you have this nice little topping pattern, short-term topping pattern that confirmed to the downside. So then where do you start to see some potential support kick in? This rising trend line. I've been harping on this thing for a while, thinking that it would come back into play, and it's very much in play going into tomorrow. Does this S&P 500 find some support at this 395, 396 level tomorrow? If not, then you're looking at a retest of this declining trend line here that it broke back in January, late January, in fact. So I would look at that 392 level to be the next level. So you got two support levels very close nearby for the market to potentially bounce off of. But then where it starts to get a little bit more trickier or a little more unknown is if these two levels break, what are we starting to target then after that? Well, then you have this previous higher low that becomes very much the focal point for the market going forward. Do we break below the December lows? Because that would likely lead to the scenario where we retest the October lows. So what I'm trying to do here is give you the different scenarios of what I'm looking at, what's the potential, and what are the things that are at risk here. So very much early on in this, if we're going to retest these October lows, this is just the beginning. There's going to be bounces. There's going to be sell-offs along the way. But this bull flag here, this was a huge deflator for the bulls because everybody was thinking that this was the calm before the next leg higher, and we didn't get that at all. In fact, the volume has actually started to pick up here in recent days. You can see we're getting above average volume there. Now, on the weekly chart, what am I watching here? Well, you have this 200-week moving average. This is a huge focal point here. We blew right through it during the 2020 lows. But once the Fed stepped in and actually cut rates back down to zero, everything took off and everything was fine. We don't have that at this point here. We don't have a Fed that's trying to make the market go back to stabilize things. They're actually doing the exact opposite. So you're looking at a potential move here on the weekly chart back to this 200-week moving average. It's a critical level because so many of these pullbacks that were considered very major at the time have found their bottoms right at this 200-week moving average. The only ones that didn't, 2008 and 2000. Yes, I know 2020 didn't, but that was a little bit of a different circumstance there where you had the Fed stepping in. So that's what we're looking at here. The next big move on the weekly chart seems like it would go take us back down to the 200-week moving average. Same thing pretty much on the monthly chart where it's just a little bit more crystal clear. 50-month moving average providing a lot of support as well. Major pullbacks coming to an end at that level except for 2000 and 2008. Now let's look at the Qs. Qs have got all sorts of interesting stuff going on there. Actually, the Qs and SPY are both now red for the month of February. We're 21 days into this, and now we're all of a sudden back to red. That's a lot of gains just in a few days that the Qs have given up to be red at this point. Now, looking at the daily, again, very similar to the SPY, we break back below the lows from February 10th. So we're back below those levels. I wasn't sure if we would maybe find some support there or not. You also had a lot of people harping on this being a bull flag pattern. It never looked like a bull flag pattern to me, more like an expanding megaphone, which I don't really like to trade off of too much just because it's expanding and it really doesn't keep it from just riding the downside pretty much forever. So I'm not a huge fan of these patterns. So that really didn't hold any water for the Qs or for the QQQ bulls, right? Then you got this rising trend line that we had been talking about at the last update, and this rising trend line, you saw like for 3 days in a row, would open up and then open up below the trend line and then close just above it. It was showing signs that the bulls are starting to lose a grip on the market, and in the last 3 days, it's really come to fruition there. So then you also have this double bottom breakout, and this is where we're at right now. This is where we closed. We closed on the double bottom breakout. So we've had the breakout for this double bottom, and by double bottom, I'm talking about these two levels right here. This is your double bottom here. Pretty much a textbook double bottom. We then break out. We have essentially a 2-day move that basically summarizes the entire double bottom breakout, and then you have a lot of chop that comes thereafter. You get the pullback to this breakout level, and now the big question is do we bounce off of the breakout level and resume the uptrend? That's the real big key here, because if that happens, then this rising trend line would flatten out some, and you'd have a new rising trend line to follow. If not, and if we break this support level, and I think this is key going into the rest of this week, does the support level hold? You really don't have a lot of support underneath. You could make a call that you have some at like 283. I don't know how good that support level right there is going to be at all, but that's possible. I wouldn't count on it. It really does set up for a retest of the January and October lows. That's where I think we stand with the Qs if this support level right here holds. Then let's look at the VIX. Remember, we couldn't break above this declining trend line. Well, when you had support underneath and you had declining resistance above, it was going to be forced to make a decision sooner rather than later, and it made it to the upside. Today alone, up 14%. That's a huge move. We haven't seen a lot of double-digit moves out of the VIX of late, and here we got one, and it really didn't give up much of its gains into the close. So now, if this sell-off really does start to take hold and we start to see a major move to the downside, there's a lot of room to run before we start hitting this 33, 34 area where the market has reversed at plenty of times in the past, going back to like 2020. So then, looking at T28, 2108, you saw actually the first time in a very long time closed body candle where we're down 22% in 1 day on the T2108. That only makes it now where 51% of stocks are trading above their 40-day moving average. I'm more interested in T2108 from a buying perspective when we start to get into single digits, so just like what we saw in September of last year and again in June and May. So that's where you want to start considering some strong bounce plays that could result in some major upside when we get into those single digits. Now let's look at some yields here, because I think they're telling a very interesting story as well. This is your 2-year yield. Look at this though. Guys, that's a breakout. That's going to cause a lot of heartburn for the market if this rally in the treasuries, in the yields of the treasuries, continues to go higher. And it's not just like with a 2-year. It's whether you're looking at it from that angle, from the 10-year, it's breaking out. This is another big time breakout right here on the 10-year. And not to be outdone, even the 30-year is looking really good right now. 30-year breaking out of the declining trend line there off of the highs. That's going to be a lot of problems for the NASDAQ and for the small caps going forward, because it puts a lot of pressure on their share prices. And then you got the dollar. Dollar continues to rally. That's going to also hurt profits, especially for your multinational corporations and your international companies. They're not going to do very well in that kind of environment where the dollar is very strong. And you can see it continues to push higher. So all in all, the Fed wants this market to go down. They don't look like they're wanting to come to the rescue necessarily. The market still is expecting price cuts at the end of this year. That's probably not going to happen. At least that's what the Fed keeps saying. And what we're also starting to see now is the market beginning to price in a 50 basis point rate hike at the next FOMC meeting. If that happens, that's going to be huge, especially as the market starts to price that in. Right now, it stands at about 25%, but that could easily change as the market continues to weaken in the weeks ahead. And what we hear from the Fed as well, if they continue to give us some hawkish comments. So if you enjoyed this video, make sure to like and to subscribe. Make sure you hit that little notification bell so that you get alerted every time I post a new video. Make sure to click the join button down below so you can get all my market research and support this channel. If you haven't noticed, I got a whole new backdrop. Kind of cool. I worked the past weekend on it. It looks like it turned out okay. So anyways, thank you guys. And God bless.